What the heck is going on? Is the crypto market broken? Are there still good investments out there? And when will it recover? These are probably some of the questions you are no doubt asking. But the truth of what is happening right now can be broken down into 10 different charts. And today, we are going to take a look at them. So, don't go anywhere. The charts that I will be looking at today come to us courtesy of a Coinbase institutional half-year report. I will leave a link to it in the description for you guys to come back and read later. As always, I will be giving you some of our feedback on the charts, but I am not a financial, investment, or even life advisor. So please consult your investment advisor before making any crypto investments, or any investments for that matter. Cool? Cool. Let's dive in. First, let's start with this chart over here, and that takes a look at a broad protocol TVLs. Now, this includes both layer 1s and layer 2s. However, there's a catch, and that's because they have normalized the value in TVL by the price of the token. Basically, purely looking at the dollar value of the TVL in a protocol can give you a slightly warped perception of how much new dollar value is flowing into the protocol. And that's because given that the native token is locked in the protocol, the dollar value of the TVL could be skewed based on how well the token itself has performed. In other words, TVL can move irrespective of whether you get any new funds flowing into the protocol or not. So, for example, although SUI and Aptos have both had about the same percentage growth in their TVL in dollar terms, Aptos has actually had more growth when you normalize for price. And that's because the price of SUI has performed much better than that of APT. And this is an interesting comparison, as these two are perhaps the most exciting move-based alt L1s out there. There are a number of other interesting examples over here as well. I mean, take a look at the growth of TON, for example. I mean, that's mad growth in TVL. And you'll know why this is the case if you watched our recent video on underrated crypto, of which TON coin was one of them. That will be linked to below, of course. It's not looking too good on the opposite end of the spectrum, though, for the likes of Optimism, which has seen the largest fall in price-adjusted TVL. Other layer 2s like Arbitrum and Polygon have performed better, although Base has seen the biggest growth as a layer 2, and that's probably no doubt as a result of the meme coin craze of March. In aggregate, though, TVL has grown faster than the total crypto market cap. And this is a promising sign, as it shows that people are engaging with these protocols, using them, and most importantly, deploying more capital into them. This over here is the chart of the active addresses versus total transaction fees in standard deviation terms for May. And this was for a number of different layer 1s and layer 2s. As you know, standard deviation is a measure of variation from an average, and in this case it was measured in the months from January to April. As you can see, there are only 2 coins that have seen positive growth in fees and active addresses in May, and that was Solana and Tron. Surprised to see Tron over there. That aside, it seems as if layer 2s have grown a lot in May when it comes to additional addresses. This is perhaps because of the rollout of the Denkun upgrade with EIP 4844. It then also makes sense when you consider that the net fees have fallen because of this. So that's basically the lower blob transaction fees. Oh, and by the way, if you guys want an overview of what EIP 4844 is and what it did for Ethereum and its layer 2s, look no further than down in the description. Now, when it comes to the protocol losers in May, Binance Smart Chain and Cardano saw the most pullback, both in terms of fees and address count. It's not looking good, bruv. Anyways, before we move on to the next chart, help me out with a tap of that like button to give it a boost, and slap that subscribe as well to make sure you get our next vids. It would be much appreciated.
Bro Crypto Podcast.
Okay, welcome to the Bro Crypto Podcast. I'm Chadimus Maximus, go by MaxChad100 on Twitter.
And I am Gigadick, the dude with the biggest PNL in all of crypto.
Bro, say what? My PNL is 100% bigger than yours.
Bro, please. I was longing Doge and drinking neat Belvedere while you were still spot buying BTC on Mount Gox, bro.
Bro, you're still driving a 2020 Aventador. Where's your Bugatti at?
Bro, When bonk hits $1, I'm going to be rocking a super yacht while you're still stuck in traffic, bro. The Bro Crypto podcast is sponsored by the Coin Bureau Deals page. If you're looking for trading fee discounts of up to 60%, exchange sign-up bonuses of up to $60,000, and amazing discounts on hardware wallets, then don't be a bro, be in the know, and check out the link in the description below. And now, back to the show.
Bro Crypto Podcast.
Bro.
Bro.
Bruh.
Bro.
Bro.
Bro. Oh, okay, they're still going. Right. Look, you can either listen to these idiots for the next 4 hours, or you can head to the Coin Bureau Deals page and find something useful. Your call.
Over here, they break down the Ethereum transaction fees in the top 50 smart contracts. These 50 smart contracts account for more than 55% of all the gas spent on Ethereum over the year. More evidence of the success of Denkun can be seen on this chart as well. And that's because the percentage of transaction fees that have been paid by roll-ups went from 12% of mainnet fees down to less than 1% now. That's a pretty significant fall. However, it's been less of a success for the ultrasound money theory as ETH has become inflationary once again, i.e. new ETH issued as rewards is higher than the burn from EIP 1448. You can see this more broadly with the total fees in ETH which has been paid over the past 6 months. This peaked back in March, but has since been coming back down a lot. That being said, the authors think that if we were to see a return of market volatility, then this would drive people to start trading again and therefore pay higher fees for block space. More fees equals more burn, less ETH, and hopefully higher price. When it comes to growth, two of the smart contract use cases that have seen the most growth in fees paid have been bots, the MEV type and the Telegram ones. The latter are no doubt additive to the ecosystem, and the former are arguably extractive. Following on, this chart we have over here is next, and it's the total TVL on Ethereum's layer 2s mapped against those aforementioned total ETH fees. And as you can see, TVL has increased by 2.4 times over the past 6 months. And most of the growth seems to have come from Base and Blast. However, I happen to think that the former is genuine TVL and the latter is a bit more speculative. And I say that because Blast has seen growth through numerous airdrop seasons, and one of the few reasons as to why people want to gravitate to it as a layer 2 is because of this. These farm tokens are about to be dropped to users and may even have dropped by the time this video goes out. Whether these users are likely to continue using Blast after the drop without other seasons being announced, I mean, that's anybody's guess. I personally think that the airdrop meta is kind of broken right now, and Blast seems to be one of the biggest farms there is as a layer 2 right now. But, time will tell. On to the next chart, and it's time for some Bitcoin on-chain analysis. They take a look at active and inactive supply of Bitcoin. Just a quick bit of terminology. Active supply is that which has moved on-chain in at least 3 months, and inactive supply is that which has been unmoved for up to 1 year. Here you can see a long-term evolution of these supply metrics for these two types of holders. The theory is that drops in active supply have historically trailed local price tops. Basically, people are slowing down their transfers and activity in general. And in early April of this year, that active supply reached a top of 4 million BTC. And since that time, though, it has been coming down and was at 3.1 million in June. So, given that the local top was close to April, this theory appears to have played out again. When it comes to the inactive supply, though, it has not moved anywhere since the beginning of the year. So the longer-term investors aren't moving their coins for sale just yet. So maybe we do have longer to go in this bull market. Well, at least we hope so, right? Next chart, and this takes a look at the correlation matrix between Bitcoin, Ethereum, and a whole host of other asset classes over the past 90 days. As you know, correlation measures how much two variables move together or don't move together. Those that are over 50% or lower than minus 50% are considered generally to be statistically significant. As you can see, Bitcoin and Ethereum are quite correlated at 80%, although this is down slightly from earlier in the year. When it comes to other assets, there doesn't appear to be a real statistical significance in the correlation coefficients. For example, the 90-day correlation with the S&P 500 is only 36%. And if you look at how stocks have performed over the past month compared to crypto, it kind of makes sense. Stocks are breaking all-time highs, whereas Bitcoin has been kind of pushing sideways for some time and even fell quite considerably last week. Over here, they have a chart of the daily volumes for both spot and futures markets for Ethereum and Bitcoin. In the most recent month, the volumes were down at least 34% from their March peaks, which was quite a big drop. Having said that, though, these volumes are still higher than all months since September of 2022, excluding March, of course. So things are still way better now than they were at other points in the earlier cycle. It's also worth noting the impact that the spot ETFs had on spot volume. The spot volumes in May are 50% higher than those that we saw in December. And then zoning in on the Bitcoin ETF share volumes themselves at 1.2 billion, they now account for 14% of global spot volumes. It will be really interesting to see what impact the launch of Ethereum ETFs will have on ETH spot volume. I don't personally expect it to be anywhere near as much of an impact as Bitcoin's, but it could still surprise to the upside. Anyways, here we have a chart for the open interest of Bitcoin futures. This includes perpetual futures or perps, as well as those on the Chicago Mercantile Exchange or CME. What's really interesting is the growth in open interest on CME Futures. As you can see, they increased by 2.2 times since the start of the year, and it's at record highs. The growth has been even more pronounced than when they launched futures ETFs in September. So, what gives? Well, it could also explain why the price action of Bitcoin hasn't been as impressive over the past 2 months, even though the spot ETF flows have been relatively strong. And that is the basis trade. Quite simply, people are engaging in an arbitrage trade or cash and carry trade on the basis or spread between the CME futures instruments and the spot products. I talked about this a few weeks ago in a tweet, but basically, these flows into the ETF products over the past month have been delta neutral, i.e. there has been equal and offsetting sell-in by the brokers that are hedging this trade, something that can now fully be done with registered broker-dealers, and something that the report does point to. It's also interesting how much market share the CME futures have gained in the past year compared to normal perps. This can only point to the fact that more and more institutions are getting involved in the crypto markets, given that they are the predominant users of these CME futures. Moving over to the ETH charts, the CME futures are also at an all-time high. However, they still remain a much smaller percentage of all outstanding futures open interest compared to the percentage of that in the Bitcoin charts. So perhaps there is less institutional interest in ETH vis-a-vis Bitcoin. This is something I postulated in a video on ETH ETFs, which you can find in the description, of course. Anywho, something else that is really interesting here is the spike that we see in ETH open interest immediately following any of the important Ethereum milestones and upgrades. One other thing which is quite surprising for me is the demand that there is for fixed-term futures on centralized exchanges. This is about the same amount of open interest that we are seeing for the CME futures instruments. I guess it could also be the demand from smaller-scale cash-and-carry traders, as I don't see any reason as to why any directional traders would favor fixed-term futures over perps, but that's maybe just me. Curious if there are any traders out there. Have you ever used the fixed-term futures on these centralized exchanges? Let me know down below. The final chart is further proof that the recent growth in Bitcoin ETF holdings since April can be attributed to the basis trade. And that's because they have normalized the spot ETF market cap by the CME open interest. As you can see, the ETF AUM appears to be relatively flat, and that's as opposed to back after the ETFs were first launched. The normalized ETF holdings were growing and peaked 40 days after the launch, which was about during March. It's no surprise then that we saw Bitcoin making that new all-time high in March. I happen to think that we will only start to get more pure directional ETF flows when more liquidity starts coming into the system. And if you want to know when that is, well, look no further than my Bitcoin price prediction video from the other day. Top right, por favor. That's it for all the charts for today. And like I said, it will be linked to below for you guys to come back and read later. Would love to get some of your feedback on it though. So let me know what you think. Which protocol's TVL growth surprised you the most? What about the lack of price action with the ETF flows? Is it the basis trade or something else? Let me know down below. And finally, if you found this video fire, then fire up those likes. And don't forget to subscribe to make sure you're next in line to receive my latest Coin Bureau vibes. Oh, and hit that bell as well to get these while they're hot. That's it, my fellow crypto fans. Gotta fly.